Financing HMOs are always going to be more difficult than single lets. Most lenders will look for experience. They want to see some kind of experience, and that would be experience not necessarily with HMOs, so you don't have to have HMOs already, but experience with single lets, about managing properties, about looking after tenants, dealing with voids, all of that sort of thing. That doesn't mean that there aren't a couple of lenders that will look at people with very little experience, but it is very, very difficult if you don't have that experience. So that's the key thing to start with. As far as loan to values are concerned, the loan to values are not as high. You can't borrow as much money on HMOs as you can on single lets. The number of lenders that are looking at HMOs again is a lot less than there are single lets. So where we could have sort of 15, 20 different lenders that would look at an individual's single let, it could only be 3, 4 lenders that would look at the HMO. So it's a lot different. The cleaner the transaction, the better. And by clean I mean no adverse sort of credit, things like that. So the more vanilla a transaction is, the better if you're looking at HMOs. They take more time. You can move single lets through quite quickly. HMOs can take quite a bit more time, and a lot of that is due to the additional information that you have to provide. There could be licensing, depending on the council, is depending on the type of license and how difficult it is to get that license. Whether you need to, whether there's a license in place already, or you need a license. Whether you're refurbishing a property. But I suppose the biggest thing really for any lender is why HMO? Why is that particular property an HMO? Does it sit as an HMO in the right place? So does that part of town have lots of HMOs? Is there a market for HMOs in that area, or is it the only HMO in the area? If it is the only HMO, why? If you can answer those questions, then fine, but you need to know all of those things. You can't. It's not simply about buying an old 5 or 6 bedroomed house and saying, right, I'm going to convert it into an HMO. It's not that easy, and a lender will really want to know the reasoning behind it. Valuations wise, again, is another potential issue. Each and every lender tends to value HMOs on a slightly different basis, and I won't go through all of the different ways that they do it, but your sort of thought as to what the HMO could be worth could be completely different to the lender. So it's absolutely essential before you buy that 5 or 6 bedroom house and think, right, I am going to change it because it's easily going to be worth, because it's going to be bringing in this much income. Speak to Property Trials Financial Services. We will start communicating with the lenders, start talking about the area that it's in and what it's doing, and getting an idea for the value. Because if there is a disconnect, a huge disconnect between those two, it isn't going to happen. As much as you can say, but it's not going to happen, because the lender will have their sort of rationale for value, and they won't stray from that. So I think for HMOs, it's about getting the broker, the advisor in as soon as possible, and get them sort of understanding what you're looking to do, and they can be very, very successful. But it's not the panacea for everybody in property that, I've got a mobile phone, I've got a credit card, I've got a single let, I need an HMO, because I haven't got one. Why haven't I got one? It's a difficult market. There are people that go into it and love it, people that go into it and don't. So don't sort of fall into the trap. And again, speak to your advisor. We know the areas, we know people to speak to in all the areas, and we can tell you, give you some advice as to which way to go.